the average return on your money invested in the American S&P 500 index has been close to 24% the 12 months following a bear market.
The age-old question, should I buy or should I sell, or should I buy the dip?
Yeah, I think, again, like this is a very important one. And look, again, the disclaimer here is it of course depends what assets you're invested in, because like, let's say, for example, I guess it brings that concentration risk into play again. But if you look at some of the darlings through the COVID period, so if you look at the Zooms, you look at the Pelotons, some of those companies are down anywhere between 50 and 80% since their highs last year.
Ouch.
Whereas if you look at the wider S&P 500, for example, where those companies are listed, as we sort of illustrated previously, it's in bear market, which means as at today, it's down about 20% in the current calendar year. And, obviously you'd much prefer to have a loss of 20% as opposed to 80%. But I think something that is important to remember is we always tend to have that reversion back to the mean, which is why, as we look at long-term historical returns of Australian shares or international shares getting up near, 7, 8, 9%, you've got to remember that to get that 7, 8, 9% on an average basis year after year, you need to have a good recovery following on from a decline. And so what we've got up here on the screen is essentially what it looks like. So a period like we're in today, and of course, history is going to be the best measure for what comes next. I don't have a crystal ball. I wish I did. But ultimately, if you look at all of the bear markets that we've had since mid-50s, so we've got data dating back 65 years. The average return on your money invested in the American S&P 500 index has been close to 24% the 12 months following a bear market. So let's say, for example, we started to post a recovery today. If we were looking solely at past periods following on from periods like we're having in 2022, the average recovery 12 months following today would be more or less 24%. And that's not to say that is what will happen, but I think, if we look on the slide there, we've only really had 1 or 2 periods where it hasn't been a positive period, 12 months following on from a bear market. So again, if you was just a betting person purely based on probability and statistics, it looks like a pretty attractive investment.